All right, episode 228. Who doesn't love a guide, right? Everyone loves guides. And today we're talking about the Unlocking the Real Estate Investment Success, a guide for agents, only for agents. So if you're not an agent, then don't listen to this.
Turn it off.
Yeah, right now. We're going to get started here in a second. Message. All right. Welcome back to today's show. Look, I'm excited about this one because, look, last week you were out of town.
I was.
You were, I think, riding a humpback, or what were you doing?
I was riding a humpback. It's tough to get on them, but once you do and you tame them, it gets a lot easier.
Yeah. So if you don't know who that is, that's Brian Force. He's fresh off an Alaskan cruise, looking tan.
Fresh off the boat.
It's a weird thing to get tanned by, but it's always daylight up there.
Yeah. That's why I said it.
Yeah, you get a little more time.
Yeah. You get more time in the sun, or just they give you more than 24 hours up there?
I feel like you have more than 24 hours. You know, it's always bright outside.
Did you get more work done?
I didn't get any work done.
So more time, less work.
Exactly.
I like it. Well, welcome back, buddy. Who we don't have today is Matt Kelderman. So Matt is now on an Alaskan cruise.
Exactly.
Yeah.
100%. We traded.
Yeah. So today we're going to talk about what Brian, this is a topic that Brian and I love, and we're calling this the guide for agents. It's the Unlocking Real Estate Investment Success. Brian and I, if we just go in our backstories, we own a lot of real estate investments. And that all started because we were a real estate agent, and we still are.
I think just like you, my mindset, and I think a lot of people in this business's mindset was when they got their license that really they wanted to aspire to be real estate investors and own real estate and build the portfolio. And they figured that the most direct route to do that was to start selling real estate as a profession, because that creates really close proximity. So I think that there's probably thousands of people listening right now that have the same mindset. And it turns out that's the best way to find deals and the best way to start to, find that proximity. But it's a different mindset, a different strategy. There's a lot that goes into it. And so we haven't really talked in a long time about that aspect of things. We talk a whole lot on this show about how to do more deals, how to build your business, all that type of stuff. But I think for most people watching the show, they got into this business with the idea that they wanted to build a larger portfolio. They wanted to build generational wealth. They wanted to secure their financial future. And we haven't approached that in a long time. So excited to really dive into that today. I actually just did like an hour educational block for our team on this exact thing. So we've got like a whole list of things to dive into. A lot of this stuff, by the way, it isn't sexy, but it's very, very, very matter of fact, very actionable. And I like when you and I do shows because I think we bring a lot of actionable guidance rather than just like fluff and mindset stuff. We're going to talk about some actionable stuff today. But first, we got to thank the people that make this show happen, starting with the one and only Mortgage Michael, the backer of Texas. Check out mmgloans.com. We still doing Oklahoma before I say that?
Sure.
All right. Texas and Oklahoma, best lender in both of those states and one of the most genuine human beings you'll ever meet in your life. Turns 40 in a couple months, and you can give him a birthday present in the form of sending him some loans. Check out mmgloans.com and then head on over to armadillo.one/tour, the home of Armadillo Home Warranty, and the Ron Smith, one of our favorite people in the world and probably the best school bus driver out there. Check out armadillo.one/tour. Boom! That's the sound a school bus makes. Then, when that home is all warrantied up, turn it over to Homeward Property Management, the only name in North Texas and West Texas property management. Check out homewarddfw.com. And if you want some cool drops and background noise in your life, check out torestudios.com. That's TORE studios.com. Jesse will get you hooked up in this sweet little setup here. That is it for sponsors. Let's go.
You know what? I like you doing sponsors. I might just give it up.
Yeah.
Yeah.
All right.
Well, and I will tell you, like, with Kelderman being gone, Kelderman does he shares this out to all the Facebook groups. And I'm looking at some of the groups I'm in. I'm like, I'm questioning why I joined this in the first place.
Like, give me an example.
This one said no simps.
That was the group.
Yes. I'm like, what group did I join was in there?
Do you do any sort of screening before you join this group?
I don't, obviously not. But I shared it in there. So,
all right.
So if I get banned,
that's our viewership just spiked, yes. Which is crazy.
But, one thing that, again, going back, we got in this for real estate investment, right? And then, organically our real estate sales team grew, and a lot of real estate agents, they're like, why'd you get in this? They're like, I really wanted to become a real estate investor. I wanted to build my investment portfolio. I wanted to flip houses. And then you start asking them about their experience about investing, and they have zero.
Yeah.
And they've been an agent maybe 8, 10, 20 years.
Sure. And
the only house they have is the one that they own.
Yep.
And so, I'm kind of trying to figure out where's the disconnect first off.
Yeah.
And then second, is that disconnect leading to maybe a fear, or is it that we get so ingrained of, being a real estate agent that we are passing off opportunities to our investor clients or to other people, rather than looking at them ourselves first?
Yeah, 100%. And so, to speak to the first point you just made, fear definitely does play a part in it, for the simple fact that every one of us has a goal. Every one of us has a vision. The only thing that stops me from taking action towards my vision, if I already have the necessary tools to manifest that vision, is the lack of confidence. And you could translate that as fear, right? I don't know enough. I'm not quite sure. It's tough for me to pull the trigger. We would probably both agree that real estate professionals, real estate agents specifically, probably have more access to deal flow than any other constituency of people out there.
Yeah.
Definitely much more than dentists or doctors or lawyers or whatever. We work in it every single day. And so the disconnect between finding deals and doing deals has to be in that middle ground where we don't quite know how to take action, and we're afraid of doing the wrong thing, making a mistake, losing everything, whatever it is. And so that fear penetrates that. And then you just made it. The second point was the lack of education. We spend so much time focusing on how to build a real estate business that we don't spend very much time on how to build an investment portfolio. And if we were as confident in building our investment portfolio as we were in building our real estate business, that fear gap would close, and we would start to see ourselves as collectors of assets just as much as we would fiduciaries of clients.
Sure. And no, I love that. And let's break this down, because you said the education piece, and that's why you're here. So if you're tuning in, and Jared, thank you. You're not going to get lightly roasted today, Jared. This is about real estate investing.
Depends on what you say.
Yeah. I mean, if you're against real estate investing, you're against building wealth and becoming wealthier and getting financial freedom, then maybe we will roast you a little bit. But, today's show is going to be it's a 4-step guide, right? And really the first, let me just go over the 4 steps, and then let's touch on them. The first is like spot high yield opportunities. And you kind of named as like looking at and finding deal flow, right? And then we'll go into that. And then how do we use and leverage our real estate license would be step number 2. And then really I'd like to dive into this, because somebody had mentioned this earlier, because I had just bought a house last week that I'm adding to my rental portfolio. And this agent, Keely, she's with me here at EXP, and she's like, man, how do you buy all these houses? And I'm like, this was an appointment I ran.
Yeah. And it was in your database.
It was in this one was, it was a referral.
Yeah.
And I'll walk you through all that steps, and making sure that, hey, I still had their fiduciary best interest in mind. And he didn't get the short end of the stick, where a lot of people are like, you're just taking advantage of these.
Yeah.
Right. And so we'll go down that step. Step number 3 is build your dream team. And, we hear that a lot. You go into buy any real estate book or guide, or, talk to any guru, and they're like, go build your dream team, get your list of real estate agents. Right. And when we look at that, they're probably not vetting the right real estate agent.
Yeah, the real estate agent is probably actually, when you talk about your team, you have all the different verticals. You got lending, insurance, all the things that you need to partner with to get a deal closed. Real estate agents might be the hardest one to find really good ones.
Really good ones. And then last is the best part. Create that cash flow machine. And as we have time here, I want to talk about net worth versus cash flow, because that's something that I am now highly focused on, where I built a high net worth, but my cash flow was really low. And it sounds great, but then if you don't have the money coming in, then it's not what it's all chalked up to be. Yeah. So let's go back to number one, Brian. You talked about deal flow, finding and spotting high yield opportunities. And we put in here, like, look, this is about finding the golden goose.
Right.
And as a real estate agent, we should be, right, Saka? Saka's now in Kelderman's chair, just kind of hanging out and listening in. He's tuning in over there and taking ample notes. We should be lead generating every day.
We should be lead generating every day. And I think maybe to make it a little bit more concise, maybe even change spot to recognize. Because if you're lead generating every day, you actually are finding high yield opportunities. It's just whether or not you're able to recognize them. And this goes back to your conversation with Keely. You were able to recognize a high yield opportunity in that rental property that you just bought. And you were able to have an educated conversation that showed how it was a win for the seller. Obviously, it's a win for you. And I would venture to guess that a vast majority of agents, they don't have the education to recognize that out of the gate. And so when you don't have the education, the conversation just isn't there.
So yeah, you're correct. And it's twofold, right? We want to go look for deals for ourselves, or for maybe we picked up an investor client. So as we're building, as we're becoming and unleashing our real estate and investment success, right? We tend to say, all right, I just picked up an investor client who wants to buy a property a month, or they want to build their rental portfolio, or whatever that may be. And if you don't educate yourself on what a deal is, and you start sending out properties to like, say, myself and yourself, Brian, sure, you're really going to show how uneducated you are when you're like, hey, I just sent this over. This would make a great investment. And then we quickly, on just napkin math, shows that it's losing $300 a month.
Absolutely. And that's just if you're working with investors. If you yourself are lead generating and your sole mindset is I'm looking for buyers and sellers to represent, you're going to miss a lot of opportunities where you could purchase those assets too. A really simple way to look at this is, how much time, energy, and really money do we spend throughout the year on educating ourselves on how to be better real estate agents and real estate business owners? We have coaches, we go to reunion, we go to seminars, we do all the things. If we spent that same amount of time, energy, and effort on how to be educated investors, how much better would you be at recognizing that expired that you're calling right now? Actually, it would be a win for you and for them to actually become the buyer of that asset. And we got to start to view it in that way as far as the education process.
So if we were to say, I was at an all-day event yesterday, and talked about the law of averages. And the more that you grow a sales team, or just a real estate team in general, unfortunately, the law of average mindset comes in. 100%. But you get enough average mindset, enough average will equal greatness. But what ends up happening is that, as you're going through this is you've got top performers who are willing to lead generate consistently every day. They're looking for motivated sellers and buyers. Mm-hmm. And when you talk to any agent that got in this, now, unfortunately, 51% of agents last year did 0 or 1 closing, right? And so that obviously means that there's a disconnect between what that 51% is consistently doing every day. And if we were to say, hey, how many of you, and we surveyed it, if we did a survey on that, how many of you guys got in this to become to build your net worth or your wealth building through investing, we would probably see a large majority of their hands go up. And so if we were to go and say, all right, let's look at this selfishly for a moment. Let's not lead generate for your business, right, to go after sellers and buyers. Let's lead generate for your investment, your investment wealth building side. And you're going to be selfish for a second. And anybody you call, you're the one that is looking for an opportunity to buy that house. Yeah. maybe that would change their mindset so that they can go and start, spotting those high yield opportunities. Because with enough calls or enough reach outs and enough conversations, you're going to run across people that will want to sell their house at a discount, and it would make sense from a buy and hold perspective.
Yeah.
Right. And then what you can do in the evening times is, as we're spotting these, is that, we didn't talk about education as a true step in here.
Yep.
But as we're educating ourselves, you can go to any rental calculator and start plugging numbers in.
Sure.
So I'll give you an example. I bought this house in the Colony, Texas for $211,000. Now, normally that's not a price that I would like to pay for that.
In the Colony, in the same neighborhood you guys were buying for $50,000 10 years ago?
Yeah, don't remind me on that. Thank you. Thank you.
Times have changed.
Yes, but that house for $211,000, realistically, I'll run you through my math. Realistically, I wanted to pay about $175,000. Now, it wasn't going to happen. I tried.
Mm-hmm.
And I'll walk you through the whole scenario as we leverage out our license on that to let you know from a fiduciary that I truly had his best interest in mind. But I really wanted to pay $175,000. And that was based on how my buy box criteria is and the equity and everything else. And so that wasn't going to fly. He told me that he had an offer. He had two offers, one at 204 and one at 211. Mm-hmm. I tried to match the 204. Obviously, that wasn't going to work because he had a 211. And so I ended up matching the $211,000 offer. And the education piece on this is that if I would have put 20% down, it would not have cash flowed. Not in today's interest rate market.
Yeah.
It would have lost about $300 or $400 a month if I remember
correctly.
Can't do it. And so I was in a position that thankfully that I had some stock I was willing to sell for almost the exact same amount. And so I sold that, bought that cash, and I'm walking into about, $60,000 to $70,000 worth of equity. Yeah. And then the cash flow on it with a paid off property is about 9% a year.
And then just for funsies, we don't have to get too deep into this, but you own that stock for more than a year, right?
Yes.
So the tax implications of selling that stock and rolling it straight into a real estate investment, are there any implications there?
There will be. Now, what I'm going to do is now some of the stock, because I was accumulating it since 2019, some of that stock will have some gain, but overall I sold a stock that I lost, it was like a $60,000 loss on paper.
Oh, okay.
So some of it, I'll be able to negate that, but let's just say that
you'll capture the loss there.
Yes, I'll capture the loss. Now, let's just say that there was a gain. What I could do is go in and depreciate this house against that gain, and then it would be pretty much tax-free.
Yep. And
then what I will do is when interest rates hit 5%, when they do, because I believe it will go there in the next 2 years, that I'll do a cash out refinance, pull about $100,000 to $110,000 out. I don't want a ton of leverage anymore in my life. And so I'll do that on that one and another property. So I'll have about 200 to 220, and then I'll go buy a third. And then keep stacking that with a low debt service percentage, and then just keep growing it from that angle. But the point being is that the majority of agents who would send this out if they were to market this property were like, and you would see in the MLS, great investment property.
Yeah.
Perfect rental.
Yeah.
And then you go run the numbers and like, it's perfect rental for whom? I would buy this with 20% down. I'm losing $300 or $400 a month.
Okay. So let's just say, great point, right? Like a lot of agents, they'll send out great investment property in the description, and maybe it's not. But let's just say an agent found that exact deal. They negotiated it. They would pull the trigger on it if they had the cash to do it, but they don't have the cash to do it. You as an investor, take your agent hat off, right? What if somebody brought you that deal and you didn't have to lead generate for it? You didn't have to do anything. Would you cut that agent in on the deal somehow?
I would pay. I wouldn't cut them in.
Would you reward them in some respect?
Yeah, they would get a fee. Absolutely.
100%.
Yes.
Right? And then obviously the larger the deal, I think the larger the reward.
Sure.
If you're starting to do larger commercial deals and things like that, there's sometimes equity to be gained in the form of sweat equity and things like that. The point that I'm trying to make is spotting and recognizing high yield deals is going to be the dam that breaks for you to not only start to really build your portfolio, but if you're worried about being able to actualize them and capture them and get them done, if you find a great deal, don't think that you're the one that has to close on it. The people in your world that are not in real estate that want to be investors, they'll do those deals all day.
They call it bird dog.
Yeah.
All day.
Yeah.
Right?
Yeah. So the biggest thing is about finding, again, it's easy to find money. If the deal is present, the money will show up.
When you and I did our first syndication deal, I think I called every person that made six figures that I've ever met in my entire life.
Yeah.
Right. Like, and we raised the money. But we didn't discriminate. It wasn't like, oh, would this, like, the money is out there.
Yes.
You just got to find the deal.
Yeah. And then we did our second deal and we raised that money even faster.
Mhm.
Right. And from that, and we became more educated in that space. We could talk about it more confidently. We know the nuances and we know the landmines and we know the operational flow. And that's what happens. And from that step one of spotting high yield opportunities, you have to put yourself in a position to understand what an opportunity is. And it's going to take time to lead generate. You've got to focus on that. You've got to put yourself in front of more sellers. Like Keely was like, how do you do this? Every time I seem like I'm talking to you, you're buying something or making an offer. It's like, closed mouths don't get fed.
Yep.
And the more offers I make, the luckier I get with winning one.
Yep.
And that's just the law of numbers.
It is the law of numbers. And then obviously, as we spoke about before, the more educated you are, the fewer dollars you need to convert. Because there's going to be opportunities that pass you by if you don't recognize them. If you're spending a certain amount of time trying to become a better real estate salesperson, you need to spend the exact same amount or more time in your local investor group. Surround yourself with people that speak this language well before you're even doing your first deal. That's what's going to give you the education and the confidence to have those conversations. And once you do a couple, you will be amazed at how freely, that starts to flow. How much easier those conversations become. What's our next step?
Number two, right?
Sorry.
Yeah. Number two is leverage your real estate license. And this is where it kind of gets tricky on this, because when you talk about buying houses, especially if you buy them at a discount and you're a real estate agent, you get a lot of hate. And the hate comes from like you took advantage of somebody.
And I think that can be true at times.
Sure.
I also don't automatically assume that you took advantage of somebody because you got it at a discount.
Sure.
People have way different motivations for selling.
So I'm going to go back to the Colony house that I just bought, right? For $211,000. That was referred to me as I sat down with this seller. I had mentioned to him, I said, look, originally that I wasn't coming in to buy his house. It was, hey, I could sell your house for this. We need to do some cleanup here and there, but you could get this amount of money over here. That was not on the table of what he wanted to do. And so I said it 5 or 6 times. I said, are you this again? I can get you more money. Yeah. He wanted convenience. He wanted the confidence in the close. He wanted cash, and he just wanted simplicity.
Yeah.
And so from that's where I sat down. I said, okay, then we're going to move forward to this. Now, realistically, my normal offer would have been, again, a lot lower than what I paid for it.
Yeah.
But, I was in that cash position to say, all right, I'll go ahead and match the $211,000 and did the deal. And so it's usually, look, sellers want their terms and their price.
Yeah.
And it doesn't always mean it's the best price for the market.
Right. They want their price for the terms they're getting as well.
Correct.
Right.
Yes. And so, we closed on his terms. It was, I think, like a month or 2 month close because he wanted some time to clean up and get everything ready. Wanted it cash. He didn't want financing. I suggested, and this gets a little bit more detailed that we won't go into too much, but I said I'd carry the note. I want him to carry the note.
Yeah.
So I was trying to do owner finance terms to get a lower interest rate. So I didn't have to put all the money down. And so I went through some checklist items, and that's just something that we can do when we're leveraging our license.
Yeah.
And when we go to every listing appointment, we need to have our check down list, right? So if you're a quarterback, you've got your audible list that one play you go up to the center before the ball gets hyped. You're looking at the defense and saying, all right, is this run play to the right?
Yeah.
Looks like it's going to get stuffed.
Yep.
So we probably need to do our check downs and say, all right, the receiver to my left, he's got one-on-one coverage. The guy's a lot slower. Boom, let's go ahead and check it down and go that way. So when we're walking into a listing appointment, we should always look at, can I buy this property myself? Does this fit my criteria? Is it something I should wholesale? Can I get it cheap enough that I could wholesale it? Is it something that I would keep in my rental portfolio?
Yep.
Is it something that I can sell to one of my investors or a flip opportunity?
Yep.
And then if all those get checked down to where you go to brokering the deal, because we're real estate agents and real estate brokers, that's what we get paid for. We get paid for brokering a transaction.
Exactly.
That's where our commission comes into play. That's last on our list. And we just go down our checklist.
Yep.
And a good buddy of ours who runs KW Wealth,
Brett Tanner, literally about to say
Brett
this.
Tanner has this kind of dialed in and says the same thing, is like, go down a checklist. You should be the buyer walking into that door.
How can I buy this is his first question. I was literally about to say that. Exactly.
Yes, you should be the buyer no matter what.
Yeah. Because here's the thing, the listing appointment is going to be pretty much the same on the fiduciary side. You're doing your presentation, you're running comps. What do you do to get homes sold, quicker and for a higher price? All that stuff is the same on every appointment. You are an expert. This is what you do. You change your mindset to, how do I buy this? Is your first question you ask. And you do that because, by the way, 98% of the time, the answer is going to be no, it doesn't work. For most listing appointments. I mean, it just is. That's just going to be the majority of the appointments that you go on. But you're never going to find those two where it makes more sense for you to be the buyer unless you start with that question. That's the recognizing and spotting of opportunity.
Do you need to make disclosures when you transition from I'm trying to represent you as an agent to I'm going to be purchasing this as an investor and there are profits to be made on my side of things, and I need you to recognize that, Mr. Seller, Mrs. Seller?
That's a great question from the audience.
That's a good question from the audience.
The audio was so great.
Yeah, we got a live studio.
Yeah, live studio audience. Yes, you always have to disclose, right?
Yeah,
so
every house that I bought from a would-be client, they've always known that.
So you have to disclose no matter what, and it's written into your contracts, right? So no matter what, you have to disclose that. I put in my disclosures, by the way, when I'm making any offer, my intent is to profit from this purchase, right? There is no ifs, ands, or buts. Whether I'm wholesaling a deal, in fact, if I'm wholesaling something, there's even, I've had our attorney kind of update and give me some different language on it that gives us equitable interest, so we can actually start marketing beforehand. That was a new change that I've learned about, but. In any offer, I always put in here and I make it clear. Even if I send an email, I said, I just want you to understand, I'm purchasing this offer, and this purchase price of X is my intention is to profit from this, whether I'm going to flip it, wholesale it, or keep it as a rental property. Yeah. That is the number one intention that I am doing, and that I'm not representing you. I even put it in there that I am not representing you as your agent. You are free to get representation or talk to an attorney. That is a choice that you can make.
And that goes back, by the way, to the price and terms. When the terms are what they're really looking for, and this is why it's only going to be a small percentage out of the appointments that you run, as long as they're getting those terms, that's what they're choosing, right? That's what they want. And so
certainly you just don't want to go in there with the expectation of I'm representing you and then give them an offer that's not ideal for them without disclosing that.
Don't ever feign representation, and don't ever take advantage of people. 100%. The universe is big enough for us all to succeed. You don't need to take advantage of people. I don't think any reputable investor would ever do business that way.
And Corey Mills, a great friend of ours and friend of the show, just sent me a text. He's like, here's one I'm buying in Sherman. It's a 3-bedroom, 2-bath, 1,260 square foot climate controlled storage building. With the climate controlled storage building in the back, I bought it for $163. I'm going to put some new garage doors on it, and on the west side of town by the elementary. So I'm going to rent it for around $1,650 to $700. Might try $1,750 a month. So, it's, that's a little bit more than the 1% rule. And the 1% rule is which again,
but is that with him renting the storage unit?
There's a storage unit, like it's attached to it or something like that.
Okay.
Climate control.
So he's not going to rent it separately.
Yeah, I don't think so. That'd be kind of cool. But the 1% rule is if you buy a house for $100,000, it needs a rent for a minimum of $1,000 a month or greater than that.
Yeah.
The 1% rule doesn't really work in today's
interest rate market. 1.5% now.
Yeah, 1.5%, and that has to deal with a lot with again going back to the education piece in the beginning that we talked about is understanding your numbers, and then coming up with realistic numbers. Where I'm seeing people kind of fumble the ball right now, and this is where, step 3 is building your dream team, is get with the right people that understand real estate investment, which will be, if you're not a real estate agent, then get with a real estate agent that understands investing and has investments themselves. Since you're listening to the only real estate podcast worth listening to, more than likely you are an agent. Then get with others and network with them and learn from them, from people like Brian and myself. You could go to and sign up for our investor newsletter, deepbluere.com. So that's our syndication company and capital raising company at Deep Blue Capital. And we talk about investing all day long there. And we talk about building and buying more doors, which we have a podcast called More Doors Podcast on that side. But the biggest mess up I'm seeing right now, actually 2. I'm seeing that they're too aggressive on what they believe they can get for rent.
Yeah.
We'll go back to that in a second. And property insurance.
That's been, if that hasn't slapped you in the face by now, yeah, that's a tough lesson to learn.
So this Colony house, it's a 3-1 and 1,200 some change square feet. Normally that property insurance would be about $1,200 to $1,400. $2,700 for that.
Ooh, I was figuring probably 80 to 100%.
Yep. So if you go to a rental calculator, the rental calculators aren't going to factor in the increase. Like they have their kind of low.
It's another like 120 a month.
Yeah. So they're going with their lower cost in there because, if you haven't messed with property insurance lately, you don't know.
Yeah.
Taxes are up a little bit. So you got to factor that in. And then most people just don't factor in the right additional costs. So the best thing that I do, I go to the rental calculator that I use, and I don't know which one you use, Brian, but I use it's calculator.net.
Calculator.net?
Yeah,
Okay.
the rental property calculator. So you can put your purchase price in there, whether you're using a loan or not. How much you're paying it for, what were your closing costs? Does it need repairs? If it needs repairs, you're going to build that in. And then it's got property taxes. Total insurance is pre-populated at $1,200. So it's going to throw a lot of people off because they're like, even I'll go a little bit more than that, but they're not probably doubling it.
What is the lawyer's title app pre-populating at right now?
That's a great question. I need to go look it up. I don't know.
They're all low.
Yeah.
You got to adjust that.
They're all low. But what people don't account for is maintenance, building up a maintenance reserve account. They're not building in a vacancy reserve. And then honestly, they should be building in a management fee.
So I did this exercise with soccer probably 4 or 5 months ago. I have a calculator that I just downloaded from Bigger Pockets, but I usually just do it on my phone. And we were talking about a deal and I was just backing everything out, right? And I started with management fees, CapEx, right? Taxes, insurance, and brought it down. And it makes a massive difference. I think that's one of the biggest oversights people kind of don't see or that they make is not really accounting for the right expenditures.
100%. And so like here, I'm putting this in right now, and going with, let's see here.
A lot of people get really excited about the deal that they have until they back out those expenses and realize it's a losing opportunity.
It's fun to get excited about deals.
It's not their fault.
It's fun to get excited about deals.
No, it is their fault. No, it is their fault.
You don't know what you don't know.
But they do because they're not going and seeking the right questions. And that's the problem, is that everyone gets excited about doing a deal. And we see this and we've seen this when we work with a lot of people that are flipping houses, and then all of a sudden their flip houses are sitting, and then you go run the numbers and you're like, guys, you should have never bought this house. Like,
couldn't agree more.
And I've run many appointments where an investor has called me on a house that they were trying to flip for us to come in and sell it, and they weren't happy with our numbers. And they weren't happy with our numbers because a wholesaler or they themselves pushed it up to the very, very tip top.
Yeah.
And it's the same thing when, again, we're going back to, we go back to the beginning part of what we talked about of overestimating the rental monthly amount, is that the only way the deal works is they're basing it on them getting the highest they can for the neighborhood every single time, rather than being more conservative and saying, hey, does this pencil at $2,000 a month when everyone else is getting $2,150 or $2,200?
Yep.
If it works at $2,000 or $2,100, then buy the deal. But
Yep.
if you're telling me that, hey, you have to get 23 or 2,400 when
Yeah.
there's nobody else out there or only one, then to me, I'm not gonna take the gamble
Yeah.
on buying that property.
This shows up a lot in the multifamily space is a really good example of it. We have a lot of friends that are multifamily syndicators, and when you're underwriting a multifamily deal, there are many more variables than on a single family deal. And we know a lot of people that'll advertise deals that when we look at their underwriting, it's like 15 different things have to go right. And usually you're lucky if like 7 or 8 of them do. And yeah, if all 15 do, you're going to knock it out of the park. And you could do a presentation and really convince yourself and other people that all those things are going to fall into line. But realistically, as an investor, you've got to prepare for about half of those things to not quite hit the metric, right? And so all of your deals have to at least make sense and break even when not everything's going right. That's how you know you bought a good deal. Nick says this all the time. Every single home run, it has to turn into a single if it goes wrong. It can't turn into an out. That's the best way to describe it. None of your deals can turn into a strikeout. Even your home runs have to become singles or doubles.
I like that.
That's going to have you saying no to a lot of deals, by the way. But that's how you build wealth.
The power is a no. When you start getting thrown deals at you, yes is a bad word.
Yeah. The power is in no and then continuing to spot opportunity. If that's the only deal you're looking at that month, that's where that tug of we got to get a deal done comes through, right? That's why it's so important to have the consistent habits of finding opportunity every single day, making the calls every single day, talking to people every single day. It's
And
way
look, I'd just
easier
like
to
to
say
add on
no when you
that.
got 5 more opportunities tomorrow.
I'd like to add on that from like an agent who was a solo person for 8 years because teams weren't the right thing for me. What you come to realize is that when you're trying to build something else around you, sometimes it's you need to put yourself in a place that other people are,
Yeah.
like the good home team, like Brian Force with the Livian team.
Sure.
Like you need to join a team because it's not what you yourself can build around you, but what the people around you, you are the culmination of the people that you surround yourself with. So you surround yourself with really strong agents like Nick Good. You surround yourself with people like Brian Force. Like that's where your business starts taking off.
Yeah.
And you want to build everything around you. Maybe it's around who you put yourself around.
I appreciate that, brother. You're damn right. It goes back to, again, to just surrounding yourself with the right people, getting educated, finding opportunity, 100%.
And building your dream team. So
Yeah.
that Saka hit the nail on the head, and we appreciate it, Saka, on that. And you know, it goes into, again, your inspectors, you know, it goes into your agents, it goes into your insurance agents and you know, your attorneys, and drafting it up correctly. And so that's the team's the easiest part to build out.
It is. And the timing is the thing that I want to harp on there for a second. We normally don't try to start building our team until we have a deal. And that's kind of the wrong way to go about that. And I understand, you know, there's a kind of a scarcity mindset around that. Sometimes I don't want to reach out to these people. I don't have a deal or anything. I felt the same way in the beginning. I'll give you a great example. I haven't flipped a house in 2 years. They haven't really been there since the market shift. They're coming back now. But what was that one in Euless, like 2022 Walden? I think that was the last one that I did. And so there was an opportunity that came a few months ago, and I had no hard money lenders really in my docket that I hadn't really worked with anybody in a while. That was a good one. Damn. And I'm like, where's my train of thought now? He's cracked his whole head off. So anyway, and so I had a couple of different lenders that had kind of come on the scene that I hadn't really reached out to yet. But I saw more opportunities coming down the pipeline, and I started reaching out to different hard money lenders. Hard money is a great tool, by the way, for getting deals done. You have to be smart about it. It's high interest, short term. But I didn't have any deals in my under contract right then, but I just started to see the wholesale deals pick up, and I was like, I got to get ready to start doing flips again. So I reached out to like 3 or 4 different hard money lenders. I just had a basic like 15-minute conversation. I was like, what's your origination fee? What are you writing at right now as far as rates, things like that, documentation, turn period, all that type of stuff. Had really, really great conversations. And every single one of them, as soon as, we would be ready to go for a deal, was ready to pull the trigger right away. They didn't care that I didn't have a deal right now. They cared that deal flow was picking up, that I was asking the right questions, and that I was a serious buyer. I hadn't done a flip in forever because the market hadn't really been, akin to it. But I was confident to go build my team beforehand so that when the next deal is there, you're ready to go right away. Don't wait until you have a deal because you're kind of already behind the 8 ball.
And you're bringing those resources to the team,
Sure.
which means that person who you just established that relationship with is going to be getting more business.
Yeah.
And who brought that business to them? It was you. So they're going to remember you when you need to do that next deal, and they might give you a slightly favorable rate or whatever the case may be, or an IOU, because you've brought them a lot of business from generating team business through them.
Well, if anything, they're going to do an amazing job, right?
Yeah.
Because you're giving them business and you're taking care of them. 100%.
Absolutely.
And that's the biggest part is that sometimes we want to build the team and we focus so hard on that we don't do the other part to get deals, and then it just falls apart. And it needs to be simultaneously. Like, again, you do your lead gen during the day. We're searching for motivated sellers and homeowners that are willing to have a conversation with us. And then we set up our afternoon. If we don't have any appointments, we set up our afternoons with meeting with, again, hard money, our attorneys, our title companies, our insurance people, and seeing, all right, an insurance broker before, versus a captive, and what are insurance rates going for right now, so I can underwrite this conservatively, and using calculator.net. And then it just moves into, once you're ready to execute on that, and you start to do step 4, which is create the cash flow machine.
You said something to me a long time ago. No, you said something to somebody that I was, maybe it was one of the people in our office. We were all chatting a long time ago, and somebody asked you, like, you had such a large portfolio at the time, and it was like, when are you ever going to sell all this stuff and just cash out? And like, your answer was like, never. Like, and you said it in a way that was like, why would you even think that?
Yeah.
And it's because exactly what you're going back to earlier, like, the net worth aspect of it is really irrelevant if you're not cash flowing. And so going into every investment with the mindset of, I'm never going to sell this, is really the way to do a deal. You got a deal when you could choose to never sell it. That's really why, I talked about hard money and flipping and stuff. Flipping is really just a way to build your war chest to go buy cash flowing assets. Truly, to be an investor, you want to approach as many deals as you can in kind of the spotlight of, I will never sell this. You need to create cash flow machines.
Well, as you're doing that, and then you build your portfolio up. Back then when I said never, that I still have that mindset today. Yeah. Now I am selling properties and I'm selling assets, and the reason being is I look at the amount of mental energy and time it takes away from me to do something else.
Right.
And I just started selling stuff last year. Well, that's a lie. 2018, we sold a large chunk of single family because our thought process back then turned out to be a little bit wrong.
A little early.
But we did not think that property value would go up any higher than what it did versus the amount of return on rental equity. And I have a different mindset today that I'll be happy to share. But, in 2022, I sold a package, or maybe it was beginning of 23, a package of Section 8 properties that was just becoming such a drain on my time and my focus and my mental health that it was like, all right, that one's time to unload.
Right.
And I also have gotten to a point of different spot in my life versus, depending on where you are as you're listening to this and your risk,
yes.
Just how much risk you want to take on.
Right. And the premise back then was like, when are you going to sell and enjoy all your money? You've sold things, you're rolling them into other investments. They're
100%.
Just, Like the Section 8, it's a fucking headache.
Yes.
Yeah. It's not like you're taking that and just moving to Guam. Guam is probably not the right example. That's cheap. That's really cheap. Okay.
Yeah, I don't know. That's definitely was not
more expensive than Guam.
Yeah.
Grand Cayman.
Then there wasn't enough in that sale, but yes. But then you start growing a cash machine. So let's just break down these numbers again. If you're in a position to own a cash versus I have the fortunate benefit to buy that last house last week in cash. The return per year is 9% return on my investment. Right, cash on cash.
Tough to beat.
Yep. cash on cash over 20-year period is a 256 return. Total profit when sold, and I'm only doing a 3% increase in valuation increase, property value increase. It's about 586,000. And
can we harp on that for just one moment?
Yeah,
the cash on cash return being 9%. I want to make this very clear. The cash on cash return aspect of it. So 9% is a fantastic cash on cash return for a real estate investment, and here's why. Oftentimes we'll compare investment strategies to investment strategies that are not of like kind, but we kind of think they are. So if we put our money into the markets, let's just say the S&P might return 10% over a horizon of like 50 years on average. There'd be a 10% cash on cash return, but a 9% cash on cash return securitized by appreciating real estate is a much safer and better investment than a 10% cash on cash return securitized by the real estate or the securities market, which is, if you've seen anything from 2022 to now, as volatile as can be, very liquid, but not tangible in the same sense. And so I would take a 9% cash on cash return on a real estate investment with the underlying asset over a 10% cash on cash in securities any day.
100%.
Like, it wouldn't even be close.
Yeah. But here's what I'll say is, like, when you're running your numbers, and maybe I run a little bit high on some of my stuff. I run at a 5% vacancy. I run at a maintenance cost of about $2,000 a year. I have about built in additional 500 other costs. So, when total income on just that one property is $25,200 a year. Now, when you look at net operating income, we're looking at net operating income of $13,043. So, we'll just call it 56 or 50% expense ratio, which
it's pretty standard.
But
50,
but most people don't factor that in.
No,
right? They don't.
No.
They don't factor in any of that stuff. In a single family rental, they don't actually look at it as one single business that they own.
Yeah.
And what is the expense ratio? Like, I'm now able to get a 50% NOI off of this one investment. Now, if I were to put 20% down or 25%, I'm in the hole and I'm losing $300 to $400 a month until the interest rate got back into the low fives.
Yeah.
The low fives would have made sense at this one.
And you're also banking on the appreciation, which you're banking on interest rates coming down, and you're banking on appreciation being there. It's too many variables.
Exactly.
Too many unknowns.
Exactly. So if you're able to go and search for enough deals, I will tell you that even in today's interest rate market, if you don't have the cash, one, use it as an opportunity to go and get more listings, build up your disposable income so that you can maybe put a larger down payment down so that it cash flows.
Or JV, call your dentist. He
Sure.
doesn't have deal flow.
Yes.
He's probably got money.
Yeah, you can JV. Look, you can do a lot of things and get really creative when it comes to the ownership. You could, again, you can wholesale it deal. I've helped investors make a lot of money on deals that I passed over that maybe I should have kept. But at the same time, I wanted to still make sure that I have a good investor clientele list. So I won't take everything down myself because I'll pass it on to make sure that they stay loyal to me. And look, I believe if I'm helping other people grow their wealth, the referral and repeat business is going to help, grow my day-to-day income, which is being a real estate broker.
100%.
When you're on a team, you can probably find the money you need right there within your own circle.
It's probably
all you have to do is ask and speak up. And
you're right, Sacco. What I would say is I want to change that mindset that, number one, you are the buyer. You're on a team, you're on living in Texas, but you should walk in as the buyer first. Now, if it's a team generated lead, that should go back to the team and then figure out how you get compensated, or is there a JV play opportunity in it? And how do you grow that together? But the mindset comes in, hey, there's a buyer. I am the buyer, not worrying about somebody else. And then if we can change and grow that mindset, then you're going to come from an abundance anyway. And you're going to always come in with the confidence of, no matter what, I have my check down list and I'm coming in, I'm the buyer. Does it fit my buy box? Does it fit the team buy box? No. Is it they want too much money? So really all the other options go away. So now we're going into the broker mindset. We're going to broker this deal out and I'm going to charge my commission and get it on the market and get it sold. And then I get paid for getting to the completion of that one. And then I go into the next one because I'm on the hunt for my next, deal to add to my portfolio or to add to my investors' portfolio so that I can build up enough reserves that I can go buy my first property, whatever that may be.
Sure. And I think it's hard conversations versus soft conversations, right? So if you come in and you have a hard conversation with somebody that expired call, FSBO call, hey, I think it's worth 500, and you come in and give them some unfavorable data that it's worth 425 because that's what the market supports. And they're just like, that's absurd. I've never heard that number ever. And it's like, well, is it more unlikely that I'm the first person that's giving you the truth? Or is it more unlikely that everybody else around here is trying to tell you that 475 to 500 is the right number and they're going to get your listing and you're going to sit on the market for 90 days. And then I'm going to call you in 90 days when it hits the expired list, which is more unlikely.
Sure. I look, we got to always put ourselves in the client's shoe though, right? Like no one wants to be sold and no one wants to be taken advantage of. They wanted, they want to, we need to
want the truth.
We want to self-discover what their terms are. And they're guiding the terms, just like that house in the Colony. Realistically, I didn't want to buy that house. I walked in there with the mindset and being ready to go, but that was not what I wanted to do. And that was not my intention originally. And as I moved them down the process and 5 or 6 times try to get them back into, I'm going to broker this deal out because I want to make sure that you understand you're going to make more money. Plus it was a referral. And I never want anybody who refers me business thinking that I'm over here taking advantage of somebody.
Certainly.
Because that can quickly spiral out of control. Is that okay? Now, Saka, you told me you don't want to go down that path. You want this. Let me see if I can make those numbers work. If I can't, and if I can get darn close to it and give you the confidence and security that when I make an offer, I'm going to close. Can we do a deal? And most of the time they say yes. I said, great. So I'm going to come back with an offer or a number, or I try to lock it up right then and there.
It's honesty and transparency.
Yes.
I think you bring that to the table every time.
100%.
You never waver from that.
Never.
Those are your morals and those are what you live by and those are what you stand by.
But you have to know the numbers. That's the number one thing is like, I knew that I'd come in here knowing that, all right, can I get $2,400 a month in rent? I will sure hope I could.
And that's at the top of the market.
That's top of the market. 2,100 is realistic.
Yeah, exactly.
Yep.
So you say, hey, if this number works, are you happy? And they say, yes. Then we go on.
100%. So,
who brings honesty and transparency to the market? Mortgage Michael DeBacker. Check out mmgloans.com for all your Texas and Oklahoma.
You know what he can do?
What he can?
DSCR loans.
Oh, yeah. He's talking about those for a couple of years now.
Yeah.
Yes, those are great.
So we didn't cover that. That wasn't on really the agenda, but debt service coverage ratio loans. And that's great for you, the investor. And if, as an agent, if you don't know what DSCR loans are, get with Mortgage Mike, mmgloans.com, and he will definitely tell you all about them.
Absolutely. And then check out armadillo.one/tour for all your home warranty needs. Check out Homeward Property Management at homewarddfw.com, the North Texas premier property management company. And then head on over to tourstudios.com. Get your face on the big screen like ours. Maybe I should take over sponsors.
I like it.
I'll do it.
Gives me something else to do. Got so much to do over here.
He just got like a lot done right there in the last 12 seconds.
Yeah. I got to send an extension. I'm trying to buy a house.
Again, look at him. Wheeling and dealing over here.
Exactly.
Recognizing opportunity.
Can you, what you didn't do and didn't ask for, and we got to do a better job, reviews. Leave us a 5-star review. Spotify, podcast, go to YouTube channel.
All of it.
Only RE.
Only RE.
Only RE on YouTube.
I think everywhere, pretty much.
Everywhere. That means the only real estate podcast worth listening to. Go to Sal Kelderman promoted today. It's been a while since we promoted the Facebook group. We got 6,300 agents in there.
Nice.
The only real estate group worth being a part of. Go join it. Check it out.
Check it out.
Maybe we'll roast Jared Ty.
Probably will. He deserves it.
Yeah.
Episode 228 in the books. Nobody's here to say take us out. I don't know how to end this. We'll just sit here until next week.
That would be. You think we could do just a constant show till next week?
Keep it going. I gotta be.
It's Fred Flintstone.
Yeah. Hey, thank you for watching. We truly appreciate it. Checking out another episode of the only real estate podcast worth listening to. If you're watching this on YouTube, please go ahead, hit that share button, hit that like button, and hit the subscribe button. Right? We're dropping more stuff on YouTube constantly. If you're on iTunes, leave us a review, please. We're really, really focused on building up those reviews so we can get more searchable content on there. And if you're on Facebook, like everyone else is, go over and search the only real estate group worth being a part of. You're going to want to go join that group. I'm telling you right now, there's so much gold in there. So go join, share us on YouTube, and leave us that iTunes review. Please go do it right now. We'll see you on the next show.